Congress releases an updated version of the crypto market structure bill, and there are some changes that you need to know about. I'll give you the details. And some Democrats are looking to walk out and block the stablecoin bill vote. This is not good. I'll share what the industry is saying. And we have updates around the SEC and tokenization, Ripple XRP, and Solana. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, big update around the SEC and tokenization. So the next SEC crypto roundtable will be on tokenization and will be held on May 12th. And Hester Peirce, commissioner of the SEC, tweeted out the details. And there are some big names that are going to be participating in this tokenization meeting because many of you know a lot of the institutions on Wall Street are getting involved. So the list of folks who are going to be there include BlackRock, Fidelity, NASDAQ, Invesco, Franklin Templeton, DTCC, the Tokenized Assets Coalition, Apollo Management. These are some very big names, folks, and you just see who's attending because tokenization is a big part of the future of this asset class, and they're going to put all the traditional assets on the blockchain, folks. It's what we've been talking about. It's what Larry Fink at BlackRock said, that tokenization is the future of finance. So this is pretty great. And Hester Peirce also said that tokenization is a technology that could significantly transform financial markets. So this is it. This is what we've been talking about on this podcast for years, that we're headed to the token economy. And I've been telling you guys, the governments, the economy, and the markets will run on blockchain. That is the world we're headed to. Your ID and your information, your identity will all be on the blockchain as well in a fully digital world. And blockchain being that layer that secures the information and allows it to not be hacked and to allow you to have control. In Web3, you can own your data and monetize it and much more. So this is the future, and you see the dialogue that's happening here. Now, on the CFTC side, Eleanor Terrett reported that acting CFTC chair Caroline Pham just told me on stage at the Network Medici conference, or the Medici Network conference, that the CFTC plans to be an observer on a handful of industry tokenization pilot programs in order for the agency to learn firsthand how well tokenized assets can function in the real world and gain experience with the technology. So you see the regulators are all educating themselves, having the dialogue, and working with the industry players to get this up and running. As stated before, this is the future. And that's why you need to pay attention and educate yourself as well as to what's happening here. And you can take your bets, right? Whether that's holding the token of the blockchains being adopted for tokenization, but also maybe grabbing some of those tokenized assets early if possible. You know, maybe it's related to certain stocks or commodities or real estate and things like that. That is something I'm going to be exploring. And of course, I'll share with you guys what I'm looking at and what I'm investing in, because I want to make sure I do my research. I don't want to blindly jump into some of these things. We need to know what's happening here, who's behind it, what's the custody, what are the benefits of holding it, you know, what does it unlock for you? So these are things that we're going to see as the crypto asset class matures. Now, quickly back to the SEC front, the SEC delayed the Canary Fund's Litecoin ETF. So this comes as no surprise. Just about a couple of weeks ago, the SEC delayed a whole bunch of ETFs, right? Ethereum staking, XRP, HBAR, and much more, Dogecoin as well. And it's what I've been saying, that they need to see the futures markets in place, and they have the deadline of till October of this year. So I expect a lot of these ETFs are going to be approved later this year. So no surprise here. Now look at this though. VanEck, which has Bitcoin and Ethereum ETFs, they become the first asset manager to file for a BNB ETF in the United States. So BNB is, of course, the native token of the Binance Smart Chain and the Binance exchange, of course. So BNB, I don't hold the token, but it has done incredibly well. I wish I bought it when it was cheap, because I remember seeing it when it was cheap, and it has done really, really well. But as you can see, many of these tokens, which were kind of outside the United States in a sense, Binance had its legal issues, of course, are now coming into the United States because this is a much more friendlier environment, and they don't have to worry about getting a lawsuit or a Wells notice like they did under Gary Gensler. So how things have changed, but you can see there's a lot of demand for these assets, and the ETF filings from these major players is an indication of that. And I've often said that you're going to have your individual ETFs for these assets, but I think the ones that are going to do really well are the basket ETFs. So essentially the index ETFs, because the majority of investors, they put their money into the NASDAQ 100, the S&P 500, and these ETFs, they give you broad exposure to the respective sector. So eventually you can have index ETFs around smart contract blockchains or proof of stake blockchains or layer one blockchains. There's going to be a variety of them. And I think those are the ones that are going to do really well in the long term. Now, folks, today the House Financial Services Committee and the House Agricultural GOP Committee, they dropped a discussion draft of the market structure bill. So there's some key updates here. As you all may recall, last year, the FIT21 bill made it out the House. Well, there has been continued updates to it, and there needs to be a version that works for the Senate. And eventually, as that gets passed, it goes to President Trump. As you know, President Trump gave the mandate of having those bills on his desk before the August recess, both the market structure and the stablecoin bill. Matthew Siegel of Van Eck weighed in on this, highlighting the takeaways. He says, the new U.S. crypto market structure bill just dropped looks like a major upgrade from FIT21. Here are the main takeaways. Number one, no income/wealth limits on retail buyers. Number two, no accredited investor or suitability checks. Number three, clear decentralization tests. No unilateral control. Greater than 10% holders must be disclosed while the project is still centralized. Number four, DeFi protocols exempt if they're non-custodial and don't exercise user discretion. Number five, defines stablecoins without calling them securities. Number six, optional early registration path plus real joint SEC/CFTC rulemaking. Matthew says solid start. So of course, these bills have to be fine-tuned. They're not going to be perfect. I just had Congressman Tom Emmer on the podcast last week, and he said, look, don't expect perfection, right? And I think the industry has to weigh in and give feedback to Congress to make sure these things are in line with what we are trying to achieve here. Protect consumers, but also let innovation flourish. And we don't have things that don't make sense or that are draconian. So this looks really good. And let me share some other perspectives as well. Justin Slaughter of Paradigm, which is an investment firm, he said the TLDR on his end is the market structure draft is an incremental, albeit meaningful, rewrite of the FIT21 that tightens affiliate sale rules, replaces the idea of the SEC certifying decentralization with an ongoing mature blockchain regime, and channels exchange oversight through existing alternative trading system infrastructure. Overall, this bill again would make the CFTC the dominant crypto regulator, but it still gives the SEC jurisdiction until a network establishes decentralization. So this is great, guys. It's what Hester Peirce has been talking about for a long time, having that sandbox. Don't go out with a hammer trying to hit all these crypto companies. Have them come in, discuss with them what they're trying to achieve, get a full breakdown of the tokenomics and all these things, and collaborate on a path to decentralization. And then that's the way it should be done. But we know Gary Gensler, scumbag regulator Gary Gensler, and Elizabeth Warren, they were not doing that. They would allow you to come in, and Gary Gensler would stab you in the back, right? He will use the information to go after you. But things have changed, and Gary Gensler is no longer the SEC. So this is really great. Eleanor Turret highlighted the following. She said, page 49 of the House's new market structure discussion draft aims to clarify that transactions involving the sale of digital commodities do not constitute securities as long as those transactions do not involve the purchaser acquiring an ownership interest in the issuer's business, profits, or assets. So it's kind of like the Ripple case, right? Okay, you have XRP. Does that give you shares to the company? Does that give you equity to the companies? Does that give you a dividend payout or profits or whatever? Of course not. So Howey doesn't apply here. I think we all know that. Logic will tell you that. So we need an updated version of Howie and how to regulate this asset class. And because it's unique, it's not oranges on an orange grove in Florida in 1930. It's ridiculous, right? That Gary Gensler was using the Howie test to try to, regulate crypto. Ellie says, in other words, if you're buying or selling digital commodities on the secondary market and not directly from the issuer itself, it won't automatically trigger U.S. securities laws unless the sale gives you some kind of ownership or claim on the company's profits or assets. So this is really great, guys. I think we're seeing some positive things here. Bill Hughes of Consensus, who I've had on the podcast multiple times, he says, market structure discussion draft. Your blockchain is deemed mature if it has fundamental value and is substantially developed, functional, open, impartial, rules-based, and is not centrally controlled or owned greater than 20%. So talking about, I guess, the validators, the tokens, and things like that. So this is great, guys. Good start. But as mentioned, we need the industry to weigh in. We need the fine tuning, go through it with a fine tuned comb, make sure everything is good here. And but I like what we're seeing here, guys. This is great. This is what we've been waiting for. It's the start of something great, in my opinion. Now, folks, quick word from our sponsor, and that is Uphold. Uphold is a great crypto platform where you can buy Bitcoin and all the top altcoins. They have 300 plus cryptocurrencies on their platform. They just added staking rewards for 19 cryptocurrencies. I've been using Uphold since 2018. They're safe and easy to use, and they are fully reserved. They don't commingle or lend out your crypto funds. You can also review their transparency report. And they have a great rewards program where you can earn up to 5.25% on different stablecoins. And this rewards program also allows you to get 24-hour early access to new tokens. And to participate, you have to open the app once per month, deposit $50 once per month, and trade $50 once per month. The stablecoins you can earn rewards includes 5% on Ripple's RLUSD and 5.25% on USDC. So if you'd like to learn more about Uphold, check out the link in the description. Now, folks, yesterday I reported about Elizabeth Warren and certain top Democrats who are pushing back on the stablecoin bill and playing politics because of Donald Trump's crypto businesses, right? Like World Liberty Financial and their stablecoin USD1 and much more. Now, I said I personally don't have a problem with that because if his kids are running it, no big deal, right? If he was running it directly, I would have a problem because, like, you're the president, you need to focus on the country. The only problem I have is with Trump Memecoin, and I think a lot of you agree with me, whether you're a Trump supporter or not. No sitting president should have that, but that's not what the Democrats are pushing back on. They're pushing back on the stablecoin bill because they're saying, "Oh, Donald Trump's going to directly benefit from us passing this." But I think there's also the game of politics being played here. You know how the Democrats and Republicans, they do what they do to each other, right? The mudslinging and all that. Well, Maxine Waters, super top Democrat, she's looking to block the House GOP crypto hearing, and they're looking to do a walkout. So this is going to get messy. And I'm going to try to get Ron Hammond on the podcast as soon as Wednesday or so to break this all down because it's pretty crazy. So like I said, the Democrats are planning to walk out on this joint hearing, which is scheduled for tomorrow. So let's see what happens. This could get messy. Representative Brian Stile, who I had on the podcast about a month ago, says, "It is my hope that Democrats, including the ranking member, join the public hearing on digital asset market structure tomorrow. Last year, 71 Democrats voted for market structure legislation in the House. This year, we are working to finish the task and have it signed into law. I hope Democrats join us in this task. Any decision by the ranking member not to join would be misguided." So this could get messy, folks. This could get messy. And hopefully they come to some sort of resolution. But one of the things the Democrats could use here against the Republicans is the Trump factor, but also to get certain language they want in the bill. And that's where we got to be careful, what they're trying to do here. We're going to have to watch this closely because, guys, you know how politicians are and you know how this all works, right? The moment you're not paying attention, something gets put in, and this is beyond party lines. We've seen it for both Democrats and Republicans. So we got to be vigilant here and hold them accountable. So let's watch what type of solution they come up with, and if the compromise puts something that is not favorable to crypto in that bill. Now, Mark Andreessen and the folks at A16Z, including Chris Dixon, weighed in on the stablecoin legislation. And here's what Chris Dixon said. It's time to pass bipartisan stablecoin legislation. The Genius Act will protect consumers and increase transparency, a significant improvement on the status quo. We support any legislation that achieves that progress while safeguarding the core benefits of blockchain technology, empowering peer-to-peer digital economies to operate without intermediaries. The bill isn't perfect and will require refinements to achieve these goals, but it is essential that the Senate complete its bipartisan work on the Genius Act. So, A16Z, the largest crypto hedge fund, not just for crypto, but for many other industries, especially tech, weighing in here. And they certainly have a lot of influence in DC. It's just, the nature of the business. We've seen this time and time again. So I think it's good that they're speaking out and, trying to get these things done. All right, moving ahead, Ripple CEO Brad Garlinghouse highlighted the following about Ripple and XRP. He tweeted out, Q1 of 2025 was an incredible quarter for Ripple with our acquisition of Hidden Road and the end of the SEC case, not to mention institutional interest in XRP ETFs globally. Moving forward, the XRP markets report will look a bit different. As some may remember, the objective of publishing these reports starting in 2017 was transparency into Ripple's holdings of XRP, which unfortunately was then used against us by the SEC and others. Our commitment to transparency doesn't change with this evolution. We will continue to publish our XRP holdings on ripple.com/XRP. Ripple and XRP related ongoing updates will also be shared through existing social channels rather than collated for a single end of the quarter update. So that's great. More updates, more timely updates on social media. I believe transparency is the key. I believe more blockchain firms and companies need to do this because we all share in the tokens. You and I as individuals can hold those tokens, and we need to know where those tokens are, who's holding what, as much as possible, right? Where's the supply? What's the tokenomics? I think we can all agree on that. Tokenomics and transparency about the tokenomics is so important. Now, check this news out about Solana. So DeFi Dev Corp advances Solana Treasury strategy with validator business acquisition. So we continue to see more companies are buying Solana and using it as a treasury reserve asset. It's been primarily Bitcoin. There were some that added ETH, but all of a sudden a bunch of companies are popping up out of nowhere, with a Solana treasury strategy. So DeFi Development Corp, they are NASDAQ listed. They are DFDV. And the leading public market vehicle for Solana accumulation today announced that it has entered into a definitive agreement to acquire a Solana validator business with an average delegated stake of approximately 500,000 SOL, which is valued at about $75.5 million. The purchase price of $3.5 million will be satisfied through a combination of $3 million in restricted DFDV stock and $500,000 in cash. Very interesting here, guys. And I think this is a sign of things to come. There will be diversification into other assets and other altcoins. But I do believe Bitcoin will still be the leader when it comes to corporate treasury reserve strategies. So very interesting what's happening here. This is what we've been talking about for a long time, related to Paul Tudor Jones' statement that Bitcoin and crypto is the fastest horse in the race among assets. Nothing performs like this. And some of the reason for that is because this asset class is truly global. Anybody with an internet connection can access the asset class. Many of these tokens are hard cap, right? It's not like there's unlimited tokens forever and things like that. Many of them have a hard cap. Many of the tokens are locked for staking. Some are lost, right? People who have lost tokens because they lost their private keys and things like that. So this drives a lot of supply and demand economics. And of course, because it's a new asset class, has incredible returns and great performance versus asset classes that have been around for a long time, have a lot of liquidity, and there's not much room for growth. This is growing, and there's room for more upside, way more upside. When you think about where we're headed with the future of tokenization and all assets going on blockchain. So I think many corporates and businesses are recognizing this. And speaking of Solana, Matthew Siegel of VanEck highlighted VanEck's recent report about Solana's decentralized exchanges and meme coins and their revenue. He said meme coins remain the primary driver of Solana's on-chain revenues. In January 2025, they accounted for 44% of decentralized exchange trading volume and 35% in April 2025. He says if we include stablecoins, Sol and Sol liquid staking tokens, often on the other side of trades, meme coins represent 99% of Solana trading activity in January and 95% in April. So look, I've often stated I am not a fan of meme coins, but I'm not an authoritarian. I believe in people's rights to invest in what they want as long as the guardrails are there. So while it's not for me, and look, people can go play the lottery, they can go to Vegas and gamble all their money away if they want. I'm not going to be like a Bitcoin maxi and be some sort of religious extremist or authoritarian and ask the government to block and ban all these things. But I think you do need to put guardrails, common sense guardrails in place. But the fact that Solana's revenues coming from meme coins, I mean, it is what it is. I see Solana as maybe that retail chain where you're going to have all these things, NFTs, meme coins, and some of these like fast, quick things like, Web3 initiatives. And that may be the lane, their swim lane versus Ethereum, which is more on the enterprise side, higher security, better uptime, but slower speeds and things like that, right? So it's a trade-offs. And institutions, I think, are going to lean more on chains like Ethereum, XRP Ledger, maybe Avalanche as well. Solana will be more to retail, right? You want to launch something, meme coins and all this stuff, they're going to go to that. So it's interesting, though, that the majority of their revenue came from meme coins, but we'll see if meme coins make a resurgence as the bull market continues. They may, it may be that when we get to that euphoria phase and everybody thinks this thing's going to keep going up forever, and the meme coins come in and the over speculation and the greed and the liquidity, right? We've seen this in stages and even in this bull market, but there will be an ultimate blow off top where everybody turns bullish and the Uber drivers and everybody's like, yeah, now's the time to buy. But that's the time to sell, right, folks? You've been a subscriber to this podcast. You know better. Don't come crying to me saying, oh, I missed the bull market. I should have took profits. We've been talking about it for years and years and years. So make sure you got that plan ready. Look at this last news item is the stablecoin USD1, which is the World Liberty Financial stablecoin, has been listed on HTX. So that's the that's the exchange headed up by Justin Sun. So HTX, I've never used it, of course. Justin Sun apparently is a big investor in World Liberty Financial and the Trump meme coin. We'll see how this plays out. I don't hold a World Liberty Financial token. I don't use the USD1 stablecoin. So we'll see how this all plays out, but it's interesting that this is happening. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. Also, be sure to check out my book on Amazon. It's available in paperback and digital. And check out my new course at mycryptocourse.com. This is a comprehensive course that covers every aspect of crypto. Best of all, what makes it unique, it features expert commentary. You will hear from founders, CEOs, and institutional investors explaining crypto to you. So no other course offers that. You pay a one-time fee, you get lifetime access, you go at your own pace. You can share the login with your friends and family if you want. But guys, knowledge is power. So if you want to expand your knowledge about crypto, understand the different aspects of this asset class and technology, this is the course for you. So go to mycryptocourse.com to learn more. Folks, thank you for watching and listening. I appreciate you all, and I'll talk to you all later.